Just 10 years ago, the three most valuable S&P 500 stocks were Exxon Mobil at $324 billion, Microsoft at $271 billion, and Walmart at $203 billion. Today, there are two $1 trillion companies, and that would be Microsoft at $1.066 trillion and Apple at $1.067 trillion. Now, based on average 12-month price target information collected by S&P Global Market Intelligence, Amazon is expected to be the third $1 trillion company by next year at this time. So, let's take a look. To me, it's not all that important which company makes it to $1 trillion in value. I think it's more interesting to take a look at the projections of the professionals and then compare it with what I see. And as this table shows from Investors Business Daily and S&P Global Market Intelligence, Microsoft is expected to lead the group. In 12 months, Microsoft is expected to be worth over $1.199 trillion dollars. From today's value, that's an appreciation rate of about 12.44%. Second on the list is Amazon, which is expected to increase about 30.59% in 12 months to a value of over $1.118 trillion dollars. And the third on the list is Apple, which is expected to decline by about 3.83% to a value of $1.026 trillion dollars. Now, even though this table has several other stocks, as an exercise, just imagine that you could only invest in either Microsoft, Amazon, or Apple, and you could only invest in one company at a time. Which company would you invest in? Let's now go to our charts and see what they indicate. And so we're now looking at the 20-year monthly chart on Microsoft, and the symbol is MSFT. For disclosure purposes, I do not hold any shares of Microsoft Corp. Now, simply looking at the price chart here, this has had a pretty good run from the bottom there in 2009, a nice curve and rocket ride all the way on up. Now, we're here at $141.52 midday trading on Tuesday. And it looks to me that we're getting a little bit of a congestion up here and consolidation here. Let's go down to the MAC and see what that shows. Now, the MAC shows that we had a top here and we did come back down, reflect off and up. But in my humble opinion, it looks like we're starting to stall at the top here. And you can see that in the histogram right there. Nice topping pattern here. So, in my humble opinion, Microsoft, even though they're expecting it to increase in value by about 12.44% over the next year, to me, it looks like it's going to stall. So, would I buy Microsoft? Probably not. And why? Well, let's go to the next chart to find the answer. And we're now looking at the 20-year monthly chart on Amazon, and the symbol is AMZN. For disclosure purposes, I do not hold any shares of Amazon directly. However, I own Berkshire B shares, and Berkshire may have some Amazon shares. Now, looking at the price chart here, we've had a double top more or less at that point and that point there. Now, recently we've come on down, but we're still riding above that 20 EMA. So, is it going to turn? Well, looking at the MAC, I'm not so sure it's ready to turn, but it's probably not too far away. We go to the histogram, and that perhaps shows that things are slowing down, maybe just a little. Some of these other oscillators, the price rate of change doesn't really show much of a slowdown, but the RSI does. Looks like there's some consolidation here. And as well, stochastics. Looks like perhaps there's some consolidation at that point. Moving down here into the Williams, same thing. A little bit of consolidation here, but I don't quite think it's ready. So, would I buy Amazon? Well, the professionals expect Amazon to increase by 30.59% within the next 12 months. I say it's not quite ready to start on that rocket ride. So I'm not ready to jump aboard here. But this is a good consideration. To me, it's a secondary consideration because of what I see in Apple. So let's take a look at Apple. And now we're looking at the 20-year monthly chart on Apple, and the symbol is AAPL. I do not hold any shares of Apple directly, but again, Berkshire B shares does. Now, the chart here looks like we had a previous top there. It came down, got reflected, bounced off of that 50 EMA, and it's been running up to here. So is that a double top? Well, I'm not so sure. Let's take a look at the oscillators. Looks like the Mac had the consolidation and it's running with the fast line moving through the slow line. So it's running on the way up here. Now, what does the histogram show? Pretty much the same thing. We're running on our way up. So everything looks good there. Same thing, price rate of change. We had the consolidation, fast line moved up, and it's running. Relative strength looks like it's running, and the stochastics as well. Probably the same thing. Yep, here in the Williams. Everything looks like it's running. Now, the question is, how much more does it have to run? Well, you're just going to have to monitor the situation here. But if you remember, the professionals thought that Amazon was actually going to decline by about 3.83%. I think they're wrong. So, given my hypothetical scenario, I probably would sell Microsoft if I was in Microsoft because it looks like it's starting to stall. I would probably buy Apple because it's running on its way up and monitor that to see if and when it started to top out. And being that Amazon is looking like it's ready to bottom here pretty soon, I would probably jump from Microsoft into Apple, wait, and then jump to Amazon when Amazon looked like it bottomed and was ready to run. So that's how I do it. So for you, that's how you can make big money. That's how you can compete with growth stocks without being in growth stocks. You can be in value stocks, jump in at the bottom, ride it, and then jump off to the next one. Now, I'm not saying to do a whole bunch of trading because when these stocks run, they can run for a year or two or even more. So, again, don't confuse it. I'm not asking you to do any trading. But what you can do is you can do some surfing from one stock to another and really tally up those gains. And so for today, that's ChewDog Charts. Thank you.